Wall Street wants you to buy Bitcoin ETFs, but is it really the same as owning the real deal? The future of finance is shrouded in mystery, but one thing's for sure, Bitcoin is a major player. Today we'll explore the two main ways to invest in Bitcoin, directly owning the digital asset or through a convenient ETF, and help you decide which path leads to your financial goals. By equipping you with this knowledge, we aim to empower you to make a well-informed decision as you embark your Bitcoin investment journey. In the dynamic landscape of cryptocurrency, navigating the best way to gain exposure to Bitcoin presents a crucial decision for investors. Should you acquire the digital asset directly or ETF? Both options boast distinct advantages and disadvantages, and the optimal choice hinges on your risk tolerance and long-term investment goals. It's essential to grasp the fundamental difference between owning a Bitcoin and holding shares in a Bitcoin ETF. Purchasing a Bitcoin ETF doesn't translate to direct ownership of the underlying Bitcoin asset. Think of an ETF as a basket of holdings that track the price movements of Bitcoin, similar to how a stock ETF mirrors a company's shares price. While offering exposure to Bitcoin's value fluctuations, ETFs eliminate the ability to directly transact with Bitcoin, a core feature for some investors who value the power of decentralized peer-to-peer transactions. Before we get to the advantages and disadvantages of ETFs, please consider sharing this video with your friends. This video is for educational purposes only. We do not encourage investing in crypto or any other assets. What are some advantages of Bitcoin ETFs? Bitcoin ETFs offer a simplified investment process catering to investors familiar with traditional brokerage accounts. They provide a convenient and straightforward entry point, aligning seamlessly with existing investment strategies. With Bitcoin ETFs, investors can bypass the complexities of cryptocurrency exchanges and avoid setting up accounts with potentially unfamiliar platforms. Bitcoin ETFs offer centralized management and reduce the security burden associated with storing Bitcoin in personal hardware wallets. ETF providers handle Bitcoin custody complexities, implementing robust security measures and institutional-grade infrastructure to protect the underlying asset. This eliminates the need for investors to manage their own Bitcoin wallets, making it particularly beneficial for those lacking technical expertise or risk tolerance. And now the drawbacks of Bitcoin ETFs. There are limitations on control and functionality. For example, while offering exposure to Bitcoin's price movements, investing in an ETF forgoes the ability to directly utilize Bitcoin for transactions. This eliminates a core advantage of Bitcoin as a peer-to-peer digital currency. Investors seeking to leverage Bitcoin for online payments, international transactions, or other decentralized applications are better suited for direct ownership. There is also counterparty risk, a potential Achilles heel. Although reputable ETF providers like BlackRock or Coinbase employ robust security measures, a small element of risk remains. In the unlikely event of an ETF provider experiencing a security breach, mismanagement, or even regulatory intervention, the underlying Bitcoin holdings could be compromised. This potential counterparty risk is a consideration for investors who prioritize absolute control over their assets. There is trading limitations due to confined traditional market hours. The trading window of Bitcoin ETFs is constrained by the traditional stock market's operating hours. This contrasts with Bitcoin's 24/7 market accessibility. Investors seeking to capitalize on real-time price movements or execute trades outside market hours might find ETF limitations frustrating, particularly if Bitcoin experiences significant price swings during off-market periods. Ongoing management fees silently reduces returns. Bitcoin ETFs usually have yearly fees to cover operational and management expenses. Though these fees might seem small individually, they can gradually lower returns, especially for long-term investors aiming to maximize their Bitcoin holdings. This impact becomes more noticeable as the Bitcoin price increases. For instance, let's say you invested $10,000 in a Bitcoin ETF with an annual fee of 1%. In the first year, you would pay $100 in fees. If the value of your investment increases to $120,000 by the end of the year, the 1% fee would now be $1,200, and over time, with continued growth, these fees can accumulate and significantly reduce your overall returns. Owning Bitcoin gives you great control but increased responsibility. Purchasing Bitcoin directly grants full ownership and unrestricted use of the asset. This empowers investors to engage in peer-to-peer transactions, experiencing the decentralized nature of Bitcoin firsthand. Additionally, owning Bitcoin allows for participation in the Bitcoin network, potentially contributing to its growth and future potential through activities like mining. Investors holding Bitcoin directly only incur transaction fees when buying or selling the asset on cryptocurrency exchanges. These fees are typically a one-time cost, eliminating the ongoing management fees associated with ETFs. Depending on the exchange and trading volume, transaction fees for Bitcoin might even be lower than the annual fees charged by some Bitcoin ETFs. The optimal selection between Bitcoin ownership and Bitcoin ETFs depends on your investment objectives and risk tolerance. Here is a breakdown to help you navigate the decision. If you seek a convenient, low-maintenance approach with exposure to Bitcoin's price movements, then Bitcoin ETFs might be a compelling option. ETFs offer a familiar investment framework and eliminate the complexities of self-custody. But those who prioritize direct control over their assets, value the unrestricted transaction capabilities of Bitcoin, and are comfortable with managing their own security might find direct Bitcoin ownership more appealing. This approach also has the potential for lower overall fees in the long run. The final word, knowledge is power. Empowering yourself with knowledge is the key to navigating any investment landscape, and the world of Bitcoin is no exception. By carefully considering your risk tolerance, investment goals, and the information presented here, you can confidently choose the path to Bitcoin that best suits your investment journey. Whether you prioritize the convenience and security of an ETF or crave the control and functionality of owning Bitcoin directly, the knowledge you have gained empowers you to make an informed decision. Remember, there is no single right answer. The optimal choice depends on your unique financial goals and risk tolerance. So take what you have learned and do your own research and embark your Bitcoin adventure with confidence. If you enjoyed the video, hit the like button, subscribe to our channel to stay updated, and share it with others who might be interested. We value your feedback, so feel free to leave a comment below with your crypto questions. Thanks for watching.